Perfect. Well, I'm Kendra Burrell, and I'm very delighted that Robin put me in touch with Rachel and was able to join today. So I am a CPA, certified public accountant. I used to work for a regional large public accounting firm doing tax compliance, which is strictly filing tax returns, federal and state tax returns. I have since moved on from there and started my own firm. It is me and soon to be 2 employees. And the services that we offer are monthly bookkeeping, quarterly bookkeeping, or annual bookkeeping, just depending on the client's needs and how many transactions they process each year. We offer payroll services for their company and employees, or if they have independent contractors, we'll work with them and issue 1099s. We also do the tax compliance work. So we'll file monthly, quarterly, or annual B&O tax returns, excise tax returns. We also do your federal income tax returns. So most everyone here likely files a 1040, so an individual income tax return. If we have any people that live out of state or kind of flip back and forth between Washington and Idaho or Washington and Oregon, we'll file state tax returns for them. And then a lot of tax planning for clients who either just have a lot going on each year, they're busy with real estate investments or busy trying to grow their business. We like to meet with them at least quarterly. If that's too often, then we'll meet twice a year or just every year during tax return delivery season. I'm pretty busy during the traditional, like normal peak tax season months of January through April. And then again in the fall, August through October. The last Friday was our very last deadline of the year, yay. So kind of getting some normalcy back into our lives. I know my husband and kids appreciate that, having me home a little bit more. So that's really what I offer, and it's a full service firm aside from audits. So we don't offer audits or reviewed financial statements, but there are larger firms in the area that do offer that. So we're definitely tax compliance and tax planning driven. Predominantly work with real estate agents, small business owners, and just anyone with an entrepreneurial spirit. They're passionate about their business. They have some goal in mind that they want to achieve. That's really what we like to hone in on and really help them get their business up and running and off the ground. So that's a little bit about me. We have 2 employees, like I said, that are being onboarded this fall. That'll be helping me out this coming tax season and hopefully for many years to come. So we're growing and we're taking on new clients and trying to get the word out there that we are open for business, and I'm very happy to meet with you all today. And what else do you guys want to know? I'm married. I have a husband and 2 littles, twins, 6-year-olds. They're in 1st grade this year. We moved right before the pandemic hit, so that was great. And yeah, we're up in Bonnie Lake now, so still local, but across the way, just at the base of Mount Rainier. So
that's awesome.
Yeah.
Christy knows a lot about Bonnie Lake.
Are you from this area? Yeah.
Oh, sorry. Yes, I've lived here in like the Lake Taps area since 9th grade, so like 1990 something.
It's a great area. I love it up here. You feel like you're kind of out in the boondocks some days, and then you're really close to Costco if you need it. So it's great.
Yep. Yep. Yeah.
So that's a little bit about me, kind of what our firm offers, and I know most of you are likely 1099 employees, right? Independent contractors, and as real estate agents, most of you, if not all of you, are probably filing a Schedule C on your individual income tax return. If you don't know what that is, please raise your hand. I'd love to chat more about it. But with most of you, with your income being a real estate agent, all of your income is going to be subject to a 15.3% self-employment tax. And being a self-employed person, there are ways to tax plan around that and set up an entity specific to your needs to not pay 15.3% self-employment tax. And that's where I really find enjoyment out of my career is helping people understand and educate them about what does self-employment mean, what does passive income mean, what does active income mean, how are we taxed at different rates, and what is capital gains tax, and when am I subject to that if I hold investments or investment properties or securities. And I think that's what really drives me forward, just like with you all meeting your clients and trying to find them their dream home and educating them about real estate. That's my passion, is more of the tax planning and compliance surrounding that. So trying to figure out how to navigate the tax waters for each of my clients.
So one question I get often, and I don't really like to advise on it because I am not a CPA, is at what point should a real estate agent consider starting an LLC or a corporation and avoiding the self-employment tax? And again, I'm talking out of turn, I suppose, and out of my what I am really licensed to talk about. But obviously, a lot of us have heard that, and a lot of agents in our office already do this. But why should somebody who is currently filing their taxes as a self-employed 1099 contractor, why should they consider, and at what point should they consider starting a corporation or an LLC and paying themselves that way? Can you kind of dive into that? I know that's a big topic.
It is. It's a huge topic, one that's frequently asked. It's a great question. And my threshold that I start advising independent contractors to set up their LLC for liability protection purposes is when they start to reach that $50,000 mark. So setting up your LLC with the state you reside in is going to provide you that liability protection for legal purposes. If your income is increasing year over year and you're nearing the $75,000 or $100,000 mark, that's the point where I would like to see somebody convert their LLC into an S corporation. And as soon as that LLC is converted into an S corporation, you are no longer paying that self-employment tax on all those earnings that you're receiving from being a real estate agent. So when you set up your S corporation, you do have to pay yourself a reasonable wage, and that's determined based on a number of factors. But when you pay yourself a reasonable wage, the wage is the only thing you'll be paying self-employment tax on. The rest of your income that is flowing through that entity that gets reported on your individual tax return from the S Corp is no longer subject to that self-employment tax. So there's kind of a couple thresholds, like I talked about. $50,000 for setting up your LLC. I think that's a pretty safe threshold. But as your income is increasing to $75,000 a year, $100,000, definitely, you want to look into getting an S corporation set up. And that's it's an additional step after filing for your LLC. And how this happens in the eyes of the IRS is that once you have your LLC established with the state, that is a legal entity. When you convert, your LLC to an S corporation, you're still an LLC for legal purposes to protect you from any, not agents, but any clientele, anything that could go wrong essentially in the business world. It's there for your protection. But when you're an S corporation, that is seen in the eyes of the IRS, like you're an S corp for tax purposes, but you're an LLC for legal liability purposes. So you really get the best of both worlds. You get all of the liability and asset protection, but you are avoiding that 15.3% self-employment tax just by being an S corporation. And the reason I say wait until your income reaches a $75,000 or $100,000 threshold is because you're going to be paying a little bit more to maintain your S corporation status, like paying yourself a payroll, likely paying a CPA or an enrolled agent, which is similar to a CPA, just different credentials, to help you maintain your tax compliance, to help you file your tax returns. So your tax savings is still going to outweigh what you're paying a professional to maintain those entities for you, but overall it's more beneficial the higher your income is, if that makes sense.
That totally makes sense. And if someone wanted to have a conversation about doing that for themselves, that's something they could contact you about and have a consultation and then hire you to do that?
They could. I am certainly available, and I also have other contacts throughout the region if somebody wanted someone more local to where they're located. I have contacts kind of throughout like Gig Harbor, Tacoma, Puyallup, Bonnie Lake area. If they were looking for somebody a little bit more local, yes. So I'm open to having that discussion. I am open to communicating with other people in the region, and just making those introductions if necessary.
Very cool.
Yeah.
Wilson had a question. Wilson asked if you help, if you're available for us to refer clients to you who need help doing the 1031 exchange.
I am, yes. 1031 exchanges, albeit they're slightly more rare these days because you used to be able to do them with like automobiles and equipment. You are no longer able to do that. You can only do it with real estate. Yes, that is certainly something that I am open to helping guide somebody in a tax transition planning type. And I've done them in the past for several clients. And yes, I would be happy to have that discussion.
Awesome. I have more questions. I can hog the mic, but does anybody else have a question?
Yes.
Okay, perfect.
Yes.
Go for it, Wilson.
If we want to go back to LLCs and S corps, do you were talking about an EA, but do you provide obviously tax compliance and quarterlies or annual if needed? Do you have like a set rate based on like a set service that you provide? Or I know it probably varies by client, but let's say an average real estate agent comes to you around $100,000. They decide, okay, I'm going to do an S corp. From setup till advising through the first year on what they need, and then also kind of ballpark on what filing your first tax return might cost.
Yeah, great questions. And you're completely spot on. All of my services are tailored to that specific client. So I don't have a one size fits all, but I can kind of give you an idea of what my services would cost. And they're pretty similar for smaller firms throughout the area. So I like to do one-on-one hourly consultations, and that's at an hourly rate of $200. That's to meet with me. And then my associates are slightly less than that work with me. And that's for me to get to know you, to help you get your S corp set up, to help you, if you don't have your LLC set up, get that set up first, apply for your EIN number, file for S corp status, and then tax planning along the way. So each hour that we meet would be $200 an hour for tax planning and consultation. And then for an individual that is filing their 1040 income tax return with a Schedule C, totally depends on if you have other stuff going on, if you have rental real estate investments or other other businesses that we need to figure out how to incorporate into your tax return. Generally speaking, it's around $750. It fluctuates, right, from client to client. So that's very general speaking. And for quarterly filings, along with or combined with like monthly bookkeeping and payroll services, that is traditionally a monthly service installment. So you pay a set flat fee amount each month for your bookkeeping to be done, for monthly or quarterly financials to be issued to you so that you can take a look at it, kind of see where your business stacks up. Where can I kind of make some haircuts? Where can I grow my business? Which is that's going to be separate from the tax planning and the tax compliance piece of things. So the monthly bookkeeping and financials would be a monthly set amount, and that varies depending on the number of transactions that your business is generating.
Awesome.
Does that kind of answer your question?
It did. I was nodding my head, but I'm not on video. Yeah.
I was going to say, if something to keep in mind with having someone like Kendra is whether or not you use Kendra for your taxes. She's a great person after this meeting to put in your phone and refer to people, because I know I say this all the time, but I'm the managing broker, so I'm always concerned about liability. These are the type of things that you really want to make sure you're not advising people on, right? If a client of yours comes to you and says, hey, I want to do a 1031 exchange, can you sell my home? You can say, absolutely. But you don't want to advise on a 1031 exchange unless you really, really know what you're talking about. That's not really what we are licensed to do. So whether or not you use Kendra to help you with your taxes, everyone should definitely save her contact information and refer her. It's just like when we have a legal issue that's outside of the Northwest MLS forms, you should be referring a real estate attorney, not advising your client how to handle a legal issue, again, beyond what we are licensed to be doing. So just a good takeaway, if nothing else from today, is save Kendra's information and refer her. If you don't already have someone who you have a relationship with, refer her when you have clients asking these questions, because again, you really don't want to advise somebody on something that you are not an expert on, or frankly licensed to advise someone on. So that's just, sorry, a little off topic, but that's obviously why Wilson was asking that question, because he has a client probably who wants to do 1031 exchange, and Wilson doesn't want to be responsible for coaching them through that. He wants to get them to an expert. So anyways, something to take away from this.
I'll just expand on that even a little bit further from my practice perspective. A client comes to me with an unfamiliar transaction or something that I'm not an expert in, quote unquote. I do all the research that I am capable of doing to fill them with the most knowledge possible. And if I can't perform and help them achieve the best tax planning or transaction, I have connections throughout the field to pull somebody else in who is an expert in that field, like nonprofits, for example. I've had several people come to me asking, do you prepare nonprofit tax returns? That's not my realm. That's not my niche. That's something that I would refer to another CPA or EA for. So I think that's a great point, Isaac, is kind of knowing your limitations, but also being able to do the research and advise them accordingly as to where they should go.
Yep. Just like me, if somebody comes to me and they want to buy a commercial property, or they want me to manage their rental property, I'm going to refer them to somebody who does that. I'm technically licensed to do it. That's not my bread and butter. And so I'm going to refer it out. So yeah, absolutely.
We have another question from Wilson in the chat. Do you handle estate tax filings?
Another great question. So I have an associate who is very well versed in trust, estate, and gift tax returns. I know enough to be dangerous, but I do not technically, I don't file them. My firm does. I have an associate that could walk you or a client through that if you had questions. And there's so many different nuanced industry groups. Like my previous firm that I used to work for example, had a state and local tax group where that was their dedicated field. That's all they did was research state and local tax implications. It is extremely broad and it's a very deep industry knowledge. So to be able to, I think, dabble in everything can be slightly dangerous because there's so many different nuanced tax laws and codes that it can be, from my perspective, slightly dangerous to know everything, but know enough to be dangerous so that you can help somebody get to the right contact and kind of coordinate with other firms, if you will. And I'm sure that's what you guys come across with your clients from time to time, where you're kind of their trusted business advisor. And that's what we all aim to be, right? We want to be their right-hand person. I want my clients to come to me with these questions. I may not know everything, and that's okay, but I want to point them in the right direction, and I want to find them the best person I can in the field within reason, like within their price range that they're looking to hire somebody for.
Awesome. One fun question that, again, just a frequently asked question that a lot of newer agents have. And I know this could go on forever, but just what are some tips for newer agents in the business or even experienced agents on common tax deductions that maybe they're not taking advantage of?
Great question. Yes, that is such a good one, a huge hot topic. So if you are operating out of your home, like most of us are, you are an independent contractor. Because you are an independent contractor, being a real estate agent, you can take a home office deduction. So if you are renting your space or if you own your space, you can take a deduction for utilities paid, for your internet bill, for repairs and maintenance costs, for a portion of your home that is used for your business, and it has to be dedicated business use. That's the one thing. So if your home is 2,000 square feet big, your office is 200 square feet, that is solely used for business purposes, you would basically multiply that 200 square feet, or divide the 200 square feet by your 2,000 square foot house and multiply that across all of your monthly expenses that you pay to live there. So repairs and maintenance, utilities, cell phone, all of that could be written off as or deducted as a business use of home expense on your Schedule C. A couple other popular ones are your cell phone expense. So if you're frequently using your cell phone for email, phone calls, I feel like we all live on our phones this day and age to operate business. You can deduct the entire cost of your cell phone plan bill, your monthly plan bill. Another frequent one is mileage. So I know with real estate agents, you're traveling all the time. You're essentially living out of your car. You can get a 57 cents per mile deduction based on how many business miles you travel each year. So it is extremely important to track all of your business trips, and there are several apps out there. I know Mile IQ happens to be a favorite among real estate agents. Download an app on your phone, and anytime you hit the road for a business transaction or a business trip, click the start button. It's going to track all of your miles for you, and at the end of the year, you can see how many miles you traveled. It could rack up thousands of dollars in deductions just from traveling from house to house, showing to showing, and client to client. A couple other deductions are gas or oil changes for your car. Those are big ones.
Hey,
Can I ask about that?
Yeah, go ahead.
Isaac and I think are going to say the same thing. You have to either commit to mileage or gas. I don't think you can do both for deductions, right?
Is that correct? That's what I thought too.
Yeah, I think you are right. It's generally beneficial for real estate agents to just do the mileage because you're going to get more bang for your buck on the 57 cents per mile deduction per mile traveled versus your gas and oil. So depending on how often you're putting gas in your car and paying for oil, it's usually more beneficial to do the mileage deduction. But I would
What about
I
your,
would go
oh,
ahead.
I'm sorry. I was going to say, what about your car payment or car lease?
Yes. So if you are, in order to do that though, you would have to place your car in service and you would have to depreciate it over time. So it would be placed in the name of your business. You would depreciate it over your car over 5 years. And if you ever went to sell the car, you would likely capture a taxable gain on that. But yes, you could depreciate your vehicle and deduct the gas and repairs and maintenance on that.
And if anyone is confused by what she just said, that's normal. And that's why you hire someone like her. So
Tax code
you-
is not easy to comprehend. It is, and it's forever changing. So
yeah, it's funny. Once I remember being the stubborn guy who took I was in real estate for 2 years and I was like, I can file my own taxes. And finally I was like, all right, way behind. I'm just going to hire a CPA this year. And I was like, why the hell did I ever do this on my own? Not only did it save me a ton of time and stress also, oh my gosh, I was so stressed, did I do something wrong? But also immediately the guy I was using found all these other ways I could save money on my taxes that well over covered what he was charging me to file taxes.
the
So
benefit
anyways,
outweighs the cost. Yeah, there's so many questions that get uncovered. I'm actually working with a brand new client right now who I literally just saved him $9,000 in taxes. And I asked him, I was like, I told him it's okay that you don't know what questions to ask. That is why we are hired. We are hired to pull kind of these questions and answers out of you. That's what we're supposed to know, is what to ask our clients. And if you do hire a tax accountant or CPA or EA, make sure that they're asking those questions and not just going through the day-to-day tax compliance and filing your return. When you are a first-year client, they should always be asking questions and looking for as many deductions as possible, any clarifying questions like, hey, I see this happened on your last year's tax return. Can you tell me a little bit more about this? We need to understand your tax position and where you're coming from in order to better plan and move forward with you as an onboarding client. So always, I guess, put your best foot forward and just come in with a fresh, clean slate mind. Just ask questions, ask as many as possible. There are no dumb questions, I promise you. So don't say that. There are so many nuanced questions and exceptions to the exceptions of the tax code that I'm sure you can qualify for. You just don't know about it. And I think even with us, with tax professionals, there's some tax laws and tax code that we're still learning. It's not an easy topic to uncover, and everyone's situation is very unique. So ask questions, bottom line.
That's literally how I met Kendra. I was like, hey, I've been told I need someone to help me with my taxes, and I don't know what I need from you. So that was our first meeting, was like, here's what you should ask people for.
Yeah, and it's just helpful to have a raw, candid conversation. And I hope that if any of you do reach out, please don't be afraid to ask those questions. And I always go into every meeting with a fresh set of eyes, and I just love learning about people and their history, and looking at their old tax returns, because I'm such a nerd in that respect, and just understanding where they came from, who prepared your tax return last, why did they do X, Y, Z, and I just want to know everything about you and your taxes. So I'm here to help you.
I think it's really similar to when you're talking to a seller who's like, I think I'm just gonna put it on Zillow and on Craigslist and sell the home myself. And it's like,
Don't do
first
that.
off, you have no idea what you're doing. Secondly, it's been proven over and over again that you will make way more money if you list with a real estate agent. And so it's funny how real estate agents get so frustrated by for sale by owners. And then they go and they do their taxes on their own, which again, that was me at first too. So it's, don't be a for sale by owner, guys. Okay.
I've definitely run into a handful of clients that I've had for a few years, and they're like, you know what? I'm gonna try doing it myself next year. And we had that delicate conversation of, okay, but just realize this is a lot to take on, and what you're paying for is the convenience factor and the uncovering of having that expert knowledge in the field. And I think up front, people look at the cost of hiring somebody and it's an automatic turnoff. I think similar to why some people try to sell their own homes. It's like, I don't want to pay that broker's commission. I just don't want to do it. I can pocket the money. Okay. Were you stressed at the end? How did that go for you? Was it smooth? It's difficult. And sometimes you have to let clients learn on their own. And I'm more than willing to help educate somebody if they want to file something on their own. They just need to know enough to be dangerous and file their own return. But what I'm getting at is those clients, 95% of them end up coming back to me with questions or issues like, oh, I filed this return and I got an IRS notice. Can you help me address this? It's like, well, yeah, because you didn't do what I asked you to do, or there are so many deductions that you missed, or you over deducted and you can't deduct these things. That's very similar, Isaac, to I think what you guys experience in the real estate field, of people trying to do their own tax returns. So more complex
In the
tax returns.
recap email, I think Rachel will probably send out the link that has all of your pricing on it as well. Yeah.
Yes, it's very generic, like I was saying too. I think Isaac was asking earlier, maybe that was Wilson.
Oh, my apologies.
No, that's okay. And I can kind of give like a broad overview. Like this is what it is for consultation. This is starting price for like monthly bookkeeping. This is the starting price for tax compliance, just so that people have an idea of where that stacks up and lands. And I would even encourage you, if you don't want to reach out to me, and I'm totally okay with that, is kind of shop around and see what's out there. And if maybe you'll find a better fit for somebody else out there, but I would also love to just chat with you and see if I can help you out as well. So yes, I will just certainly give like a baseline recap of prices, how to get a hold of me. And then eventually in a couple months, I am also going to be having my own little brick and mortar location. So I can start inviting clients in and seeing people face to face if they're comfortable coming in, and it'll be nice to get back into the groove of things.
I see another question in the chat. Do you have to keep track of personal miles on your vehicle if you plan to take actual cost deductions instead of mileage?
Yes, you do. So having that Mile IQ tracker, and I'm blanking on the names of the other ones right now, but you have the option to differentiate your trips into like personal and business. And you need to track how many miles total you took for the year. So that'd be your personal and business. And then how many miles you drove just for business. And that'll allocate your expenses to your business use. So you'll get to deduct the business portion of the expenses you paid. Great question.
Hey,
So we
Kendra.
have- Go ahead, Kristen.
Yeah, I have a question. So, going with the tracking the personal and business miles. So we're at the end of the year. I think I only did like maybe 50% business miles. So if I don't have like all the personal and business, is there a way that I would be able to recoup some of that from?
Even if you didn't track it, my rule of thumb is think about it logically. Come up with a spreadsheet or some sort of calculation that says, I work X amount of hours per week. I drove this amount of miles this last week, and kind of divvy that up over the year. So like kind of test your theory on yourself. Like take the very end of October coming up, the very last week of October. How many miles did I drive total that week? How many miles miles were business related and how many miles were personal. And you can kind of stretch that to be the whole year and estimate the amount of miles. So tax, it's not a science, it's more of an art, and estimates are okay. The IRS doesn't like to tell you that, but estimates are okay, as long as there's logical reasoning and something to substantiate and support the numbers that you're using.
Okay, that's good to know.
Yeah,
Taxes are not my, oh, go on ahead.
Oh, I was just gonna say I don't know if I should say this on the record, but I will. I don't track my miles. I estimate every year, and I'm honestly not too worried about it. Yeah, I definitely probably shouldn't be saying this, but I'm going to. I'm just not too worried about it because if I'm audited, you know, they're gonna the IRS will see how many deals I did, how many commissions I did, and they're gonna see the miles. And as long as I'm not being ridiculous on my miles, that's probably not what they're worried about, right? They want to make
It's
sure
reasonable, yes.
yeah, they're
That's
looking
exactly
for the
what it
big
comes
ticket
down to.
items. And you know, if I exaggerated by 100 miles for the year, that's like a really small ticket item.
$57, yes.
Exactly. So they don't really care so much about that one as much, in my opinion. They're looking for more of the big ticket items. Did you make income that you didn't say that you made? And you know, are these big expenses, are they legitimate? Did you really have 7 business meals every week? You know, things like that.
Yeah, if your business meals are your largest expense, we might have a problem. You know, those are red flags, exactly. And I frequently tell this to clients is if you're a 1099 employee, and let's say that you worked for multiple different brokerages throughout the year. I don't think that's the case with anyone here, but if you did, the IRS receives copies of your 1099. They have it in their database. So when you go and file your tax return, they're matching that up to see if what they have in their database matches what's on your return. So they kind of already have your return prepared in a sense, partially. The rest of it is up to you to make sure that it's correctly prepared, and getting all of your 1099s, all of your federal documents, everything you need to prepare your return kind of substantiated and have copies of that on hand for the next 7 years. That's what matters most. And being able to reasonably either estimate or provide deductions for your business is going to go a long way. I think what people are caught up on is I need to save every single receipt. I need to record every little thing. And while I would like to say, like, yeah, save every receipt like electronically. We don't need shoeboxes full of receipts. It helps substantiate your business deductions. But Isaac, you are right. They aren't looking for those small misnomers. They're looking for large red flags that stand out. Like, is this reasonable stacked up against a million other schedule fees out there? If it is, they likely aren't going to look at it. But that doesn't mean it won't get pulled for an audit. So always go into it with that mind frame of you don't want to be too egregious, right? And taking every little like fake deduction. We don't like those. Don't do fake deductions, but estimates, reasonable estimates are okay. And I think that's something that a lot of people get hung up on because they want to record every penny that they spend. So keep that in mind.
Something I'm freaked out about is I use Amazon for a ton of stuff, sometimes personal, sometimes business. I always try to do my business stuff as a separate transaction, but I do worry sometimes if I have a bunch of Amazon.com deductions for, butter dish shaped like a whale as a client gift and stuff. It's like, how are they going to know that it's legitimate? I'm scared that I'm going to take too many deductions that are legitimate, but they seem so weird that they seem like they might be personal.
As long as you, like I said, as long as you can substantiate it, right? You have documentation proving your purchase, and Amazon, they keep records of all of your purchases, right? As long as you can answer that question, if an IRS agent ever audits your tax return and they're like, hey, tell me more about this miscellaneous deduction. Like, what are these? What are these client gifts? Being able to communicate that is key. That's what they want to hear. They want to know what it was for, who it was given to, and do you have documents and like records of it? So don't be afraid I don't want you not deducting things because you're scared. That's not how filing your tax return should be. It's an open, honest, reasonable business deduction. And if that's for your client, for you to operate your business, let's deduct it. Let's knock down your taxable income because you're purchasing this for your business, for your clients, and that's a reasonable deduction. So
Sometimes it feels stressful as well. I think, Isaac, we've talked about this before. For like client gifts at closing, you're only supposed to spend or write off $25 of it or something. And like, man, if I just bought a $500,000 house with you and you're like, here's the $25 Starbucks card, like, oh, thanks, bruh. Like, so
Well,
I'll
let Kendra speak to that because I know it's kind of a debatable topic.
it is.
So
It's
yes.
highly debatable. And what I've done, it totally depends again on the client. Like, are you buying $1,000 lavish gifts, or are we buying like $50 to $150 gifts? I think it depends. And there are reclassification methods that you can
So that's-
classify some of those expenses as other miscellaneous expenses or office expense, or there are other advertising. I mean,
That's what
advertising
I think
is
we do the most is we
Yeah.
encourage our brokers to like take pictures and use the closing gifts in their social media posts. So it's like legitimate advertising that we can write off as
Advertising.
marketing.
Exactly. So there are methods to reclassify and again hone in on that. Like, is it lavish and extravagant? I think the IRS uses that for meals and entertainment. They'll let you deduct it as long as it's not lavish or extravagant or unnecessary. But if it's necessary and reasonable, then let's find a way to take this deduction. And I've met some prior CPAs out there who are pulling phantom deductions. That's not okay. I'll tell you that up front. But I think if it's, like I said, reasonable, we can find a decent classification for it to fit the needs specific to your situation.
Kendra, please feel free to say Isaac is totally wrong. Do not listen to him about what I'm about to say. But I also think my CPA pointed this out to me too, because I had a similar concern, Robin, where we were calling things that were gifts marketing, and I was like freaking out about it. And he was like, okay, let's say I'm wrong. They do call it out, and it's $1,200 worth of gifts that they take out of your marketing. You're not going to prison. It's like, first off, you have to get audited. Incredibly unlikely. Secondly, they have to actually call that out, which, like, when you get audited, they don't say, okay, prove everything. Bring me all your receipts and give me everything. Show me that this is all real. They're going to pick a few things and say, prove it. And if you can prove it, they'll probably just leave. But if there's a lot of discrepancies, then they're going to say, okay, well, show me for this and show me for this. But so you have to get audited, very unlikely. Then they have to actually call it out. Okay, also unlikely. But let's say they do call it out. Then they have to disagree. They have to say, yeah, that's not really marketing. I disagree. And at that point, if you still can't defend it, you lose the case. You're not going to prison. You got to pay the taxes on that extra $1,200 and a fine, like a little fine. So again, Robin, in your case,
tax. Yep.
Exactly. So it's like, Robin, let's say you spend $2,000 a year in gifts.
It's more than that.
Okay, $5,000 a year in gifts. Worst case is you're not going to pay $5,000 because you didn't get it. You're going to pay the difference when you add that income back in. So your tax percentage of the $5,000 plus interest, which is not much. So again, I'm all like for what Kendra is saying, where it's like, be honest, don't write off anything that isn't legitimate. But if like the IRS, all those things happen, the IRS sticks their heels in the ground, they say, nope, we're not calling this a write-off. Okay, so you pay taxes on it in the long term, in the long run, and a little bit of interest. It's like life goes on. So don't let this keep you up at night, because it's not, again, be honest. But if you're honest, the worst case is they're going to disagree with you and you're going to end up paying taxes on it. You're not going to go to prison.
I even had instances where the IRS agent found that she owned a cleaning business, found that she wasn't deducting enough deductions. She wasn't taking enough deductions. So she's like, did you know that you can take XYZ deductions? And she's like, oh, I had no idea. And this was prior, I was working at the bank at this particular point in time, not a CPA, but she came in and told us this story. And I'm like, that's amazing. Like, very rarely does an IRS agent come in and be like, did you know that you aren't deducting enough? So she actually got a refund. It is rare, but it does happen. And IRS agents are not there to stick it to you. It's kind of both. They want to make sure that you're, yes, abiding by tax law, but also educating you on the other hand. Maybe they aren't as friendly as some other people like EAs and CPAs out there, but that's the whole point of their job. They just want to make sure that taxpayers are knowledgeable enough to file their tax returns. So. What other questions do we have?
I don't know if you guys already covered it, but I've been taking 20% of my transactions and tucking them to the side to pay taxes. Is that like a pretty good quick and dirty rule, or?
I would say that's pretty standard. I think everyone uses a different percentage depending on what tax bracket they're in, which varies from person to person. I think 20% pretty middle of the road, from all the way down to 0%, all the way up to 37. So 20% is pretty generic. I would say if you're starting to make more than $100,000 a year, maybe bump it up to 25%. Anything over 150, I would start bumping it up to 30%. But again, not knowing anyone's deductions in anyone's full portfolio, maybe somebody has investments that they're making on the side where they're going to generate long-term capital gains, which is a different tax rate. Everyone's situation is unique, but yes, rule of thumb, I would say 20% is adequate.
Awesome. Thank you, friend.
Honestly, I think the good lesson there, Robin, is what you've already done. Don't use rules. I mean, I gave you that rule of thumb, but I think, and you can say I'm wrong here, but I think I said, well, this is like, just start doing this, but you should really talk to a CPA or an accountant. And that's normally what if someone like insists on a rule of thumb, I'll, tell them kind of similar.
There's so many caveats, but yeah.
Yeah, but talk to a CPA, because then you don't have to use a rule of thumb. You can be pretty dang
Precise.
Exact.
Mm-hmm.
Yeah. So I think that's a better lesson to take from that is, if you haven't talked to a CPA yet, then sure, do around what Kendra just said, but then talk to a CPA.
And there's also, I'm going to throw one more thing in here, because, talking about taxes is so much fun. Rather than withholding, which you should always set aside money for your taxes, especially as a self-employed individual. But if you ever want to estimate the amount of taxes owed, there's a couple ways that you can go about this. You can prepare like a 2021 tax projection based on what you're currently earning, where you think you're going to end up for the year. And if you don't care what you're making this year, you don't want to plan for it right now, just tell me what I owe next April. What you can do is pay in 110% of your 2020 taxes that was on your tax return when you filed it. And that just makes sure that you're covered at the bare minimum for you to go and file your taxes next April for the 2021 tax year. So there's a couple different methods for you to pay in taxes throughout the year, bare minimum throughout the year, and then pay the rest as like a catch-up lump sum payment next April. Or you can pay in as much as possible each quarter throughout the year with the hopes of not having to make a payment next April. And I think that's one of the benefits of tax planning is just understanding kind of where you fall, what your tax liability is going to be. Do I have enough saved up? Am I withholding enough from my paychecks in order to meet that tax liability for the 2021 tax year?
Well, thank you for that.
Yeah.
Awesome. Well, thank you again. That was really helpful. Any other questions for anybody? Okay, well, I think we can wrap it up there. So Rachel will have all your information in the recap email. And yeah, guys, again, I really encourage you, if you already have a CPA contact, that's great. But if not, reach out to Kendra and set up that meeting, because you can really save a lot of money if you talk to an expert. So
You can, and
Right.
I always encourage like proactive tax planning instead of reactive. So once December 31st hits, it's too late to make any adjustments for the 2021 tax year. So if you have the time, or carve out some time to talk with a tax professional now before year end, so that you can make some tax planning moves and hopefully reduce your exposure and liability for next year. Once January 1st comes, it's so long 2021, hello 2022. So let's be proactive and set up those meetings when you can.
What is, Kendra, before we meet with you, what is the best way for us to prepare to make your life easiest and our life easiest?
Really good question. So a copy of your most recently filed tax return, maybe like a summary of your current year-to-date income would be helpful, and a list of questions to come prepared with. And
Easy.
that's what I'll request every single time we set up a meeting is I want to look at all this information before we have our meeting, so that I can come prepared ahead of time to ask questions, as well as you asking questions.
Awesome. This was such a great meeting, Kendra. Thank you so much for being on with us today. Anything that you want to include in the recap email that I wouldn't be able to find, just shoot me an email and I'll make sure to include it.
I will. Thank you all for having me on. It's really been a pleasure, and I've enjoyed talking to you, and you've had some really thoughtful questions. So I'll send over my contact information and just some fee schedule summaries, and yeah, anything else you guys have questions on, feel free to get a hold of me. I'm here.
awesome. Thank you so much.
Okay.
Appreciate
everyone.
you so much. Thank you, Kendra.
You're welcome.
Thank
I'll talk to
you.
you guys later.